So I just realized that my mic was muted on the software that whole time I was talking. Well, thank God I don't think anyone was watching. Should I start over again? I'll start over again really quickly. The dollar on the daily. We have this balanced price range. I'm expecting, excuse me. I'm expecting price to use this balanced price range as a level to retrace from. You know, ICT said that if we want upside, we shouldn't get below that. We broke below it. I'm expecting us to come up, use it kind of as resistance, then go lower later in the week, which will send the indices higher to these targets we're talking about. I want to bring your attention, something I was talking about was the discrepancy between the highs in ES and the highs in NASDAQ. If you notice, ES is making a higher high. It's running out all this previous few days liquidity, or NASDAQ is, ES is not. So I'm going to go to NASDAQ. Notice how NASDAQ's making that high. So that's a little bit of a red flag. Remember I said, you know, the high impact news, we have Jerome Powell speaking tomorrow and Thursday. So what they do is in the beginning of the week, they move it sideways to build sentiment, to get traders in positions. So then at the latter end of the week, they can run on that liquidity. We've already moved so far up. You know, a lot of people might feel like we're overbought, but they don't want to go short because they don't want to try and pick a top, but we're already so far extended. So they move it sideways to get people engaged. I've been saying this a lot lately. I feel like I've been having this like internal battle where I recognize the market isn't the most conducive for setups, and then normally prior to when this YouTube channel started, I just wouldn't look at the market. But now, because I'm trying to make videos, I'll catch myself live streaming, but I'll say I'm not going to take a trade, and then I get a little greedy and the gambler takes over, and I end up hopping in a trade that isn't too good, which is what happened yesterday morning. And we were able to make it back in the afternoon, but it is making the equity curve on the account a lot slower than it should be. So I'm going to say it today, and I'll probably, depending on how if price confirms it, I'm not going to stay on for the whole session. But yeah, I don't think price is too conducive for setups right now, because look at this range we're in. It's not going to move out of this until tomorrow. Like, we might get a run up above here and like a retracement in, but and then if you look on the lower time frames of ES, it's like looking a little spotty. It's not time to switch the contract over yet, but I just don't like, because it's not every morning, especially this close to the 9:30 open, does it look like this. You can see it looks like robotic and barcodey. Whereas if you look to NASDAQ, the open highs match up a lot more, and it kind of flows a little bit better. So that's another red flag. Again, another thing I noticed too, something good that this channel has been highlighting is the trades where I can frame like liquidity, and like there's been a few times in this channel where I'm like, I want to see us go up, take this liquidity, react off this level, then go for this liquidity. And when that happens, like when you can frame a trade like that, when you can give it like multiple, when you build a narrative around like multiple contexts, those are going to be the good trades. And I noticed this yesterday when I took that sloppy trade in the morning. The good trades aren't the trades where you are reacting to price. The good trades are the trades where you predict what price is going to do, and then you act on it doing what you predicted. And right now I can't really predict too much unless we come up, take this high, and like break aggressively lower, and it's just like a liquidity sweep, then yeah. There is a medium impact news driver happening at 10. One of the one of the Fed members speaks. I'm not too worried about it. I'm not too worried about it. Okay, so we got the open. Not much movement. You can see over the London session, we kind of trickled down. Then right here at 6:30, we came out, knocked out those London lows, and sent it higher. Yeah, I had a feeling these this Monday was going to look like this, and I think Tuesday. Visibility. Yeah, I think Tuesday's daily candle is going to look just like Monday's. What I would like, let's frame it like this. Let's zoom out a little bit. I would like us on this daily to come down into this daily fair value gap, because I think based off the end of the week, I think by the end of the week we'll see a daily candle come in here and before going to that buy side. So we'll frame that as a target. It's also a daily candle on NQ. Let's watch NASDAQ today. So came up, ran that daily high. I would like to see us break aggressively lower. I wouldn't really feel that comfortable. Let's just wait and see what price does. So it came up above daily high, went high, low, higher high, coming down. It's probably going to be a breakaway. We have the dollar in the background going higher. Good to note. Seems like it's been going higher all London and yesterday. At the open, though, the dollar's pumping up. Okay, this is probably going to stay open as a breakaway gap. I don't know, one of the things I won't say it unless it happens, but ES is doing the same thing. Didn't take that high though, but I think it's really because they both want to drop into this daily fair value gap, this orange area. Okay, they're both taking this low. I like that. So since we're framing, so remember, everything has to be in the context of the draw on liquidity. So we're framing that we took this liquidity to send it lower down here. Now we want to see price print structure that agrees with that. So on the 5 minute we have the break. We don't have a break on the 15, so we are early. But remember, and then think about what it's going to look like if price delivers how we think. So this is where the price run would have started, and this is our target. So our best entries will be above 50%. We're way above that. And now we want to see, so this should act as an order block, this up close candle. So in terms of our narrative, we'd want to see this as a breakaway gap, this act as an order block for lower prices. I'm watching how price responds to these up close candles. I am noticing how ES just printed a down close on the 1 minute, but NASDAQ did not. That is interesting. I'm watching the dollar. Seems to be making a significant low. you notice, the dollar going into the open was making all these highs, and then it took this higher high, and that's when the indices rolled over. I'd like to continue seeing that. I'd like to continue seeing the dollar making higher highs above these two as the indices go down. I do not want to start seeing, I just want to see them work in tandem, really. Okay, we're coming up to that. So what I almost said earlier is this is a really good example of the difference between NASDAQ and ES. If you look at this candle, this fair value gap we just tapped into on NASDAQ retraces, it swings a little bit more, whereas this candle on ES, we didn't come back. That swing didn't come back into it. So you can see the 933 fair value gap, we made a swing low, came back, retraced a decent amount. I'm not going to use numbers just because they don't equate 1-to-1 on these two, but this is the 930 candle, and this is that fair value gap. ES came down, made that swing low, and didn't retrace all the way up into it. So that's it's also why they say like NASDAQ's a little more volatile, because in a situation where, say, you're trying to enter a trade, let's go to NASDAQ. If the screen will load, say you try and enter at the bottom here, NASDAQ might run a little, like its swings are a little more exaggerated, so it might run a little higher and hit a stop before retracing. But I think I've said a few times in this channel where I've spent, before I started this YouTube channel, I spent the whole year just watching ES, and there's been a few times when I've watched NASDAQ and like I wouldn't expect it to get here, because I'm like, oh, it's not going to retrace that much, like it looks so heavy. But that's because on ES it might not, and on NASDAQ swings a lot more. You can see ES still hasn't, bottom right here, ES still hasn't tapped into that fair value gap. NASDAQ's at the top of it. And then look at this. So depending on where you put your stop, you could have put it right here. Could have put it right here. This would be the safest, because if we go and break above this swing high, our trade plan is 100% invalid. But ES hasn't even entered that fair value gap. NASDAQ's working its way through it right now. You might not have been stopped out yet if you entered on that. But I wouldn't be comfortable. Would not be comfortable. And also another reason why it's hard when the indices aren't lined up, because so just kind of think about what we've seen in the context. It explains what's happening right now. So ES isn't even entering this fair value gap right now. It's weak. It's struggling to go higher. When we were looking at the market at the open, NASDAQ took this daily high, whereas ES couldn't even get above these highs. So ES, from London to the New York Open, showed a lot of weakness. Now you have to keep that in the context of if you're trying to take a trade, because if you're trying to go short, then ES will be the leader to the downside. But you also have to make sure that it's even harder to get your narrative and onsides correct when these two markets, because ES hasn't taken that high yet. So it's even harder to get your narrative and your drawn liquidity correct, because what you'd want to see if you wanted to see downside is it would be better to see this high get swept and then go downside, which did not happen on ES. It happened on NASDAQ, but okay. here we go. So if you put your candle stop above that, you would have been safe. And now we have this retracement. You would have got your 10 handles there, but that's a lot of drawdown. So that would have been 10 handles for drawdown. Let's see if it goes for these lows. And then see, this is such an exaggerated run up that since I'm not that used to watching NASDAQ, I can't say with certain. I mean, in theory, off of structure, I want to say we're going to take these lows, come back down, but it's a little bit different because it's just like a lot more room. And again, people like that usually because it's like, oh, you can make a lot more money. Like if you entered this fair value gap and targeted those lows, you'd get 30 handles. It's probably like a 350, maybe $400 move off one contract. But I mean, you have to think about it in the reverse too. Like you'd have to put your stop way higher up here or up here. So it's never smart to frame, like anytime you can frame a scenario where you can make more money in the market, that it works inversely too. And trust me, I understand how tempting it is to think like, oh, I could make more money doing this. I think that's how people get caught up in options too, which I started off trying to trade options, and you just have to be like, you have to have the timing right. For example, if we entered right here on an options trade, depending on like what your expiry is, and then if you want to play options correctly, you need to be using like weekly options. Like you can't be doing like 0 or 1 DTE. You need to be doing like next week, which that barrier of entry is a little higher. But at that point, you might as well just learn to trade futures. Maybe that's not 100% true, but the time decay on options, just add this layer that's harder, especially I just feel like everybody starts off there. Notice how we traded above slightly. ES still hasn't even entered that fair value gap. Yeah, I'm just sidelining it right now. Got the dollar. I'm hoping I want to see the dollar. I want to see this big candle as just like a drop down to go higher. Because if you look on the 15-minute, NASDAQ looks bullish. Actually, I haven't had a strong candle close to the downside. Yes, is looking weak as fuck. This would be something that I might enter as a more aggressive entry, but kind of going back to what we were talking about yesterday in the afternoon session, well, where the account's at right now, we're coming out of that drawdown. We're not doing aggressive entries. That's something where you do, like, if you're on a winning streak and you have a nice equity cushion and capital preservation isn't the top priority. Yeah, see? So you would have got stopped out if you put your stop above there. we're so far from these highs on ES, but they're pretty close on NASDAQ. I would like this as a bullish breaker. We had the low, high, lower low on the 5-minute. Okay. That gives a lot more context. We dropped down to fill in that opening range gap. Came down to the bottom of it, then sent it higher. I like that a lot more. It frames, gives a good context to buy side, upside narrative. Drop down here just to deliver to this. Then went higher. Wondering if ES did the same thing. What the fuck? Yeah, like look, not the same opening range gap for the S&P. That's crazy. No, wait, we closed there, yeah. Damn. See, if the S&P was telling that same story, if like this drop down was to come into this opening range gap, I'd be probably excited for longs, not XRP. Yeah, so just to reiterate, these markets aren't fully in sync, and it makes reading them harder. So know that, and Okay, so dollar looks like it didn't want to go and run this second high out. And it's making lower lows. It's good for upside. ES is making its way. Say I'll be looking to see if at 10 we drop down to this fair value gap, possibly hit the top of this breaker structure. To go higher. I would say the draw on liquidity. Yeah, we're close enough to these highs where I think it wants it. I would not say the same for ES. So, okay, if we push hard here, I'd probably expect this to be used as an order block, depending on how this candle closes. I also want to pay attention to the dollar. ES is also pushing to the upside. If this forms a fair value gap, I probably wouldn't take it. What I would like to see is like a 5-minute candle. See how this blue fair value gap and this breaker line up nicely with at least the blue one, the middle of this 5-minute fair value gap, consequent encroachment. I'd like to try and enter there as like a more possibly conservative entry. Again, I just got to make sure you frame, like we have the whole week to trade. Don't have to trade every day. I think the price action tomorrow, Thursday and Friday is going to be a lot better. a lot more obvious. So in terms of being more selective with our trades, I'll probably not take that immediately. Because this one, I feel like structurally this made sense for people to go short. But again, what's the draw on liquidity? It's not obvious. Just tapped consequent encroachment of that. I guess, these are the highs that I said I was going to be. Are they the highs? No, yeah, these are the highs that I said I wanted to go long to. But I was planning on doing it on ES. I guess we're almost there. Okay. We'll do that off of this order block. We're going to have a decent sized stop. I'm not used to playing NASDAQ. Ten handles. How does NASDAQ move? Okay, watching the dollar. I like how the dollar's making lower lows. Again, I think what might happen is this 5-minute candle. We have this 5-minute fair value gap here. Ideally, it would be a breakaway gap. Come in and see how we treat this order block. Oh, I'm going to get that execution off. Yeah. Interesting. Interesting play right here. Just because I don't do NASDAQ a lot. Because I expected us to come down into this. Got that 5 minute. Okay, we're tapping the top of that. Let's do dollar's still going down. Let's enter one more just because we're close. Okay, let's continue to watch this though. Remember, I'm really more concerned about this 5 minute context right now. So if this was our draw on liquidity up here, I don't think we would have came through so many bullish PD arrays on the 1 minute. 1, 2, now 3. But again, that just kind of goes and speaks to this whole draw on liquidity thing. So this was that order block that I remember when we broke above here, that I was initially interested in. Okay, so let's see. The dollar's still going lower. Mm-hmm. Dollars dropping. I'd like to see us move through this, and if we come back down, I'd go long off of it again. If we take this low, I think that upside is definitely not in play. You can really frame both sides right now, so I'm just going to wait until you can't. Mm-hmm. Wow, this 1 minute candle feels like it's taking forever to close. Okay, I want this 1 minute candle to close. I want to come down. Another one there. Okay, so I'm putting my stop below this 1 minute candle. I really want to see it react off of this fair value gap. If it doesn't react off of this fair value gap to the upside, I'll get concerned. I'll probably close the trade. I'm going to need the dollar to continue going lower for that to happen. And you know, it might be one of those things. This is what happened yesterday is I had a draw mapped out and it waited until the afternoon to hit it. Doesn't always do it when you want it to. So it could be one of those things where we kind of retrace into lunch and then it waits to the afternoon to run on that liquidity. I want to see it. I don't want to see this consequent encroachment hold that candle down. see. Let's notice where it's stopping. Right on that consequent encroachment. I want to see it close above, ideally in the top. Again, want to close. Close is looking likely. Emphasis on the close. Okay. I like that. I'm going to move this up to the bottom of this. Again, just taking some risk off. I took a pretty big loss in that morning. Part of me wants to try and win it back. Normally on NASDAQ, you'd want to go for the 10 handles. So we would have gotten that. But I want this buy side. And I'm going to try and win it back right now. Come on, if we close above this. There we go. Part of me wanted to go in with 2 right here. I think you saw me have that order and take it off, but it's just one of those things where I think you're watching real time right now, like those emotions you feel in trading when you take a loss and then you want to try and win it back, and it's very easy. It's like you have to like catch yourself. You have to catch yourself doing it. You have to fight. It's a constant fight. I think it's also one of those reasons why it's so difficult to live stream yourself trading, and a lot of people don't do it. And okay, move this to right above break even, because it can be sloppy, but this is what it really looks like. So again, we are above 10 handles. Ideally, I should be taking profits right here, but I'm trying to win that loss back, which isn't a super good habit. Don't suggest. I want this buy side. I'd rather take the loss than I either want my trade to play out to the full extent or take the loss. I would like to see this wick, consequent encroachment, hold this next candle off, which it did. And now I want to see it expand above this high. Again, I'm going to need a lot of help from the dollar here. I want the dollar to come take that low. What's our... That's 10 handles. Okay. I'll be happy to move it there. Because I think if it does want to get up here, it'll be moving off of that consequent encroachment with some intention and won't retrace back down. again, so we're targeting this buy side up here, this hourly high. Oh, get there. Fuck yeah. Okay, what an emotional roller coaster. You guys saw a lot right there. I will show the executions, and you know, this is a good example on why this can be difficult. And again, you got to zoom out. I don't trade NASDAQ a lot, and I said in the morning when this was happening, I'm not used to its swings. Hey, appreciate that, Zeko. I usually don't look at the chat until I'm done trading, but I'm not used to NASDAQ. I'm not used to its kind of pullbacks and its swings. So when this was retracing down, I knew it could come down here. I just didn't want to. I didn't want to be that person that's like moving my stop loss, moving it down, even though, and that's also one of the reasons why ICT himself says you should not even be demo trading, let alone real money, because the trade made sense. This narrative made sense even all the way down here. And the second we broke above this high, I was kind of eyeing this order block. And what happened was it ran up, came down, ran up, and I just got a little too frisky with it, trying to enter off this first fair value gap. But if you look, so let's say this is where our run started. Right there, that entry was right below the 50%. So you remember, when you have your draw on liquidity framed out, you can run the fib from the start of the run to the liquidity, and your best entries will be at 50%. So that's why we dropped down, came into this order block. We had this, we had the breaker. Breaker on the 5 minute. The 5 minute really told the story really well. It was the low, high, lower low, into the opening range gap. We broke higher. And then even look at this. I said I was eyeing this 5 minute fair value gap, and I knew it could come down into it. And then the wick, which remember, wicks do the damage. The body closed. I think it looks like it went over that 5 minute fair value gap just a little bit, but then we wicked down right into this 1 minute order block. That's the order block. I like that as an order block because it's the down close candle right after we broke this significant high. You could also call this the order block and that the propulsion block. We came down, bodies of the candles couldn't even close into it. Aggressive up, came down. This is definitely going to be a long journal entry, because this retracement right here, this is the optimal entry. So I should have done better. Could have done better. I could have done better. I will do better. With this entry, waiting for that. And we are walking away on the day positive. I think what you guys just saw was a big one of like my strengths. You saw my strengths and my weakness. Calling out like the liquidity and the direction. I feel like I'm, even according to my journal, I'm accurate most of the time. It's the entries on getting there and how much drawdown I feel like I want to take. This was one where when I saw us come into this order block, expand higher, and then right here, respect this fair value gap, violate this bearish one, use it as an inverse. When we use it as an inverse to go higher, that's when I was like, I'm keeping the stop there. I'm not taking the 10 handles because it is playing out the way it should in a buy program to this buy side liquidity. Again, on another day, maybe if I didn't take that initial loss, I would have went in with 2 contracts right here or right here. I would have left that one on, and then we could have rode that 2 contracts. But again, I just want to highlight the risk mitigation on doing that 1 contract. Look at it in the context of we are walking away on the day green. We didn't over leverage. We fought away our emotions to try and put on another contract to win it back. Yeah. Cool. That was a lot. That was a good live stream. I guess I'll be on in the afternoon. I'll probably do a market review today to talk about this. I feel like it's easy when I take a break and then go back and look at it. Have a lot more mental stamina to be a little more thorough with it, whereas that just drained my mental capacity. Appreciate you guys watching. Hope all your trades do well. Remember, stay disciplined, and I'll be on in the afternoon.